And what's going on YouTube? Alright, so we're going to talk about the 3 P's. It's patience, position sizing, and probability. Let's go ahead and look at the trade here. I'm going to drive this point home. Position sizing is all about risk management, and we have our trade design here courtesy of Tiny AI, which prints these designs here and gives us the most highly probable setups, and this then leads into patience. Because as you can see from this trade design, I had my position waiting for the trade, waiting for it to break through and confirm. I'm currently targeting the 200, and what I'm now going to do is set my stop. Now, I can lose this trade and that's absolutely fine. I have managed my risk here, okay? We talk about patience, probability, or a high probability setup. Now, this goes hand in hand, right? You need to be patient to trade only your best setups. A lot of traders lack the discipline or they overwhelm themselves with different ideas and they do not quite know when to actually pull the trigger. We get to the last part here, and of course that is position size here. Now, I don't know why I have a 3 sell stop here. I'm going to modify this order and set this to 2. Now, we talk about position sizing. Position sizing is so important because traders tend to focus on the upside, but they never think about the downside, how much money I could lose, especially understanding the probability of their setup. What I'm going to do is I'm going to go into Titan AI and I'm going to show dynamic show win rate. Once we enable the win rate, we could see at a 1-to-1 you need a 50% or better. Now, a 1.5-to-1 you need a 40% or better. But as you could see, I am up $800 on this trade, targeting the 200. It so happens to be the 1.5-to-1. Now, what I'm now going to do is protect my position there. This falls back into the realm of patience. Now, when you're in a trade, you have to be patient and wait for the trade to hit your entry. You also have to be patient and let the trade develop. You have to protect your capital. Now, would someone argue, all right, Gabe, your stop is too tight? Well, I could then move my stop to structure here. This is resistance for this candle became support for this candle, and I am absolutely content with the profit that I would make should I get an anomaly candle to come on down and stop me out. Again, the theory here was I was much closer to my 1.5-to-1 than I am to getting stopped out. Now, I see the 200 there. I have to respect the 200 EMA. Whether you're using the EMA or the SMA, the 200 is a moving average that you absolutely need to respect. And at this point here, when price action is below the 200, we are biased to going short. However, we do have momentum, as you can see here. I waited patiently for the trade design. I did get a little bit of, I guess, a late entry when we look at it on the 5. So the 5 and the 1 was giving us a slightly different entry on the trade design. We go back to the 1. This is where I'm going to hang out a little bit and see what happens here. Again, I get stopped out. I am okay with getting stopped out. This would be a profitable trade, and you can see the candle coming on down. This is 2 contracts of NQ. If I make $1,000 in a matter of 5 minutes, I'm 100% content. This is also another element that interferes with the trader's development, and that is greed. You do not need to be greedy in a trade. After all, you're building wealth at the port level, not at the trade level. You're allowing the trade to compound your port so that at a further date, you can then size a little bigger relative to your port. You can establish a risk of 1%, and that 1% risk with a $100,000 port is absolutely far more meaningful than 1% on a $10,000 port. Now you have to scale your greed and live in a realm of reality. You have to curb your expectations. I see so many traders, especially prop firm traders, that get far too aggressive. Now, just because you can make a lot of money in the market doesn't mean you should, because the opposite is true as well. You can lose a crap ton of money. Now, there are systems like this system here that we find at trade1348.com. Guys, you can download the app for free at trade1348.com. You could also download the PDF, which explains our high probability setups. What I see here on the 1 minute is their structure being established here. We go to the 5 minute. Let's see what that structure looks like. We're going to go ahead and move this a little further up. This is a 1-to-1 on this trade design. I'm going to be patient. I am also trading with a plan. That should be the fourth P, the plan. It's patience, probability, position sizing, planning. You need all of that, and that's what we do here at Trade 1348. This is how we teach our traders. 1, trade with the trend, have a plan, understand your probabilities, and manage your risk. This is a live trade. I am trading 2 contracts of NQ. If I get stopped out, I get stopped out. That'll be the end of this video. If I take profit, I take profit. That'll be the end of this video, and that will be the end of my day. So let's go ahead and see what's up. Make sure you check. And I got stopped out. That is the end of my day here. I am 100% content with those gains. I'm going to go ahead and live my life. Now, when you go ahead and think about those type of monies, and if you're trading for income, what $300, $400, $500 a day would do for you. But again, what started off as the 3 Ps, now we got 4 Ps. We got patience, probability, position sizing, and planning. Those are the 4 Ps to success. We need to manage our greed, manage our expectations. Anyways, this is Gabe. Peace.